Tomorrow's success belongs to those who keep today's records clean. File your returns today.
Uganda Revenue Authority. Developing Uganda together.
Wait, Abu. Tunamaliriza. And what are you doing throwing papers all over the place?
I'm looking for an invoice for a sound system and cables that I received yesterday, but I can't.
You know there is a way of keeping all this in one place and available to you as and when you need it.
I really wish there was one, because the way these invoices grow legs and disappear.
I believe this is what you're looking for.
Now how did it get there?
Tabo! Do you know that with EFRIS, you can stay on track of all your business transactions and improve on your record keeping?
How so?
Kati tuli ku computer with EFRIS. I just search using the fiscal document number and I retrieve the records I'm looking for. Bookkeeping becomes simple after that.
Kapo, awesome, yeah.
I began using URS Kakasa Solutions and now I'm in charge of my business. And you can as well.
Kakasa, be sure you are in charge of your business.
Uganda Revenue Authority. Developing Uganda together.
That's my little angel Rose. Together with millions of other children, his business supported so he can provide for us. When my other little one was on the way, even with my pregnancy complications, it was a quick, smooth ride to Mulago Specialized Women and Neonatal Hospital. Also, my new baby was able to make it through his first days with the help of specialized equipment thanks to the reliable electricity which has also been extended throughout the country. All this and more has been made possible because of you.
Join us and together let's do more for our country. Get your free tin at www.ura.go.ug.
Thank you for paying your taxes.
Uganda Revenue Authority. Developing Uganda together.
Kapo, you seem to be in a hurry. Where you go?
Good morning, Uganda. Good morning, our dear taxpayers and our viewers who are tuned in to this webinar. We bring you greetings from URA, season's greetings. We want to welcome you in a special way to this special session where we are going to discuss issues to do with income tax, particularly regarding presumptive, the presumptive regime, that one which speaks about the taxation of small businesses. In a special way, we want to wish safe journeys and journey masses to those who are traveling the country for the festive season. And we also want to commiserate with those who have had challenges in the previous times, those who have lost loved ones, but also to remind us as we travel to keep safe and ensure that we follow the SOPs because COVID is still around with us and we need everyone alive as we cross into the year 2022. With me today, as we discuss this very interesting topic of small business taxation, I have two special people in the house, and I will introduce them. On my left, immediate left, I have Connie Mobiru. She's serving as the acting supervisor, tax literacy with the domestic tax department, and she's an expert in taxation. I also have on the extreme left, Michael Masembe, who is also a tax expert, currently serving as a supervisor tax education outreach here at URA. Without further ado, I want to start this session. But before I go to my panel, I want to request that if you have any query, feel free to send it to us in our chat option. The chat option is available in the Zoom webinar. You can send us a question, and then we'll be able to respond to you. So, first and foremost, I'll begin with the lady. I don't know if it's ladies first. Connie, you're welcome today.
Thank you very much, Isaac.
So today we are going to discuss taxation of small businesses. What is your understanding of a small business? How does URA define a small business?
Good morning, viewers. Good morning, Uganda. And good morning, URA family. Connie Moruna Chwala is my name. I sit in Taxi Literacy Unit, currently under Domestic Taxes Department. And I'm serving as the acting supervisor on boarding. To answer your question, a small business taxpayer for purposes of income tax is that resident person who must have a gross turnover in a year of income above 10 million, but less than 150 million from all business sources. I could define it.
Oh yeah.
Best defined it in that way.
So we have, this is someone who has a turnover. When we talk of turnover, we are usually referring to sales.
Yes.
The sales revenue.
Yes.
So for between 10 million and 150 million, I qualify to be a small business taxpayer.
Yes.
I'm going to move to thank you so much, Connie. I'm going to move to the extreme left. Michael,
yes.
Could you please explain to us, is this presumptive tax, the small business, is it an umbrella that anyone who is between 10 to 150 million can actually go for it? Probably you could make some comments and explain.
Thank you, Isaac. Good morning, everyone. Largely regime, small business taxation, as we are looking at, it is actually responding to the nature of our economy. When you look out of the window right now, there are many small businesses everywhere. Small businesses, people running with kiosks, salons, that you as the operator of the tax, of the business, should not find it a problem to meet the tax obligations. But it has an exception though, because you see, I mentioned restaurant operator, saloon.
Yes.
The assumption in this regime is you are running with a lot in business as the operator, because again we have the proliferation of the informal sector in the economy. There is the expectation that most of the operators in these businesses do not even have the depth of knowledge on how to prepare perfect records. You get it? So you don't expect the operator of this business to know how to keep proper the real accounting records. That of the regime is around the scope of the discussion that we are starting with. And that is why, if you are maybe a professional, you are a medical practitioner, presumptive like Connie started it is on turnover, it is on total sales, the total computation, the sum of every sale that you have made in your business in a year. Just to report that to Uganda Revenue Authority, okay? And your tax is known from the start of the year. And you know it, that I pay 200,000, that's my tax. You go register to URA, make the payment, and all your business about taxes with URA, income taxes, is done. So if someone does not sit, like you asked, under this presumptive tax regime, so we are now talking about the professional, because the question that you actually asked was, so what do you say the professional should do?
Okay.
The professional should go back to the normal computation of income tax, where they report to URA what their sales are, what their cost of sales are, gross profit, expenses off. They tell us the profit, and we shall tax them off the profit.
Oh, thank you so much, Michael, for that. This year, URA has one of the strategic interventions and results we should have.
Produce your name, national ID copy. We need an email address and your contact. Because that name, Connie Boutique, for example, will be reporting as Connie Boutique, and you are the contact person for that business. Now, if you are a company, we shall require you to obtain what we call a certificate of incorporation. Formerly, we were requiring you to have Company Form 7, which shows the name of directors, but currently we are now requesting for Company Form 20. The Company Form 20 is the one which replaced Company Form 7. That is for companies. And we know that on the certificate of registration, there would be indicating a word limited, which shows that there is a company component on the name which you have registered with URSB. For the rest of the requirements, for directors who do not have teams, definitely we shall require them to register and obtain teams. But if they cannot do it individually, especially where those directors are employees of that company, then it means we shall do internally. We have an internal check. We shall do what we call a group registration, and then register the company as well as the directors, so that we tap into the resource for the company's income as well as the director's income from the said company.
Okay, thank you so much, Connie. I think our viewers, we've had an introduction of what a small business is. We've had a definition of who is required to actually register as a small business taxpayer and who is out of that category. And we have also heard from the experts about the TIN registration requirements. So now we want to dive into another session where we are going to now break it down for the taxpayers. And I'll come back to Michael this time. We are going to need to understand from you. Yes, I'm a small business taxpayer between having a sales revenue or turnover between 10 to 150 million. Where do I start from? How do I know how much I'm supposed to pay?
Yeah, thank you. You know, when we're starting the discussion today, we pointed out a major thing about presumptive: simplicity. Simplicity is key. The certainty of the tax is also very central within presumptive tax. That someone starts the year and they know this year I'm supposed to pay 200,000 as tax to URA, and that's it. So the saloon operator, the garage operator, the restaurant runner, the shopkeeper, because that's where most of our small businesses actually sit, needs to really pay attention here, such that you do not pay a tax that you do not understand. How is it calculated? Now, like Connie started it, if your turnover, your sales are between 10, that is, if they are above 10 million, but below 150 million, you sit here under the presumptive tax regime and you can benefit from it, except the other categories of professions and the like. We talked about them. Now, how do you compute it? Yes. So it means that whoever is below 10 million under this regime does not pay tax. The tax is nil. So if the operator of a business out there is running it and their sales in a year, the turnover, the sales are below 10 million, there is no tax pay. It's nil. If I should pull it into a day, look at or imagine if your business is making sales of 28,000. I think 28,000, around there.
28,000.
Yeah, if you check
that
the
is per week?
No. Daily.
In a day.
Daily.
In a day.
Okay.
Yes. So have an average around that. If your business, if you check the till at the end of the day, and what you have inside the cashier box is above 28,000 around there, then you are already subscribed to this tax regime. Okay, you are already required to register for tax and pay. Now, we also need to appreciate the rationale behind starting at 10 million. There is that expectation that this small business is still struggling. Okay? The business is still struggling to break through. And so if the sales are actually below 10 million, it would be suffocating to that business for you to expect it to pay tax. So that's why it is given that breathing time to hit above 10 million in sales to start paying. So 10 million and below, the tax is 0. Okay? The same threshold, not same, but we have a similar relative threshold for people who pay on profit, income tax on profit, where the profit is 2,820,000. But that's a discussion for another day. Let's focus on the presumptive regime here. Okay. Now, the other beauty inside this presumptive regime is that it's broken down into 2 scenarios. Okay. One, and the most preferable and most enticing, is for persons who keep records. Yes, Isaac, if you have a business, you must keep records. Connie, if you have a business, you have to keep records.
And maybe you'll also tell us what kind of records, because you realize mama boy somewhere in Nakulabye,
Mama Junior,
or Mama Junior, somewhere in Kasubi, they have a shop, but as customers move in and out, they I don't know what mechanism. Can we paint a picture for that, for Mama Junior, in the kind of records they should look at for purposes of small business?
I'm going to shed light on that. Okay. Because largely here what we've said is you need to have records that really can be evidence for the sales that you're showing you are that. Guys, look here, I made sales of 9 million. I'm not hitting the threshold of 10 million to start paying tax. So I should come to your business, and at least I have something to refer to that there were sales below 10 million. So the records, but like I was saying, the tax regime is more enticing and is more rewarding to someone who keeps records. And so the tax is slightly lower for someone who keeps records.
That's right.
And the tax is actually slightly higher for someone who does not keep records. Now, we started the entire discussion with encouragement to everyone who is viewing us that it's important to keep records because it's the basis. We call them at times source documents. If you have sales, do you have maybe what we used to call a sales daybook back in the days, where I'm able to tell? Now we talked about Mama Junior. Yes, you may not be able as Mama Junior to record sales every day. Okay? You may, I mean every transaction that happens. But are you able possibly to total your daily sales somewhere? And you keep that, and it is deliberate, it is chronological, and I can track. If I look at what you're having, I can track and see that really there were sales progressing from this day to this day. There must be that level of organization for you to benefit from this preferred band of lower taxes on presumptive. Now, of course, we are encouraging taxpayers to enroll on our more automated systems like IFRIS that automatically give you a record of an invoice or a sale that you have made. Okay? You need to have that where it's possible, and for these right now, IFRIS is more required on people who are registered for value-added tax. But remember, we are walking the journey where everyone will have to enroll for IFRIS, that we have a track of all transactions that happen in our businesses. Good for you as a business person to know there is profitability in the venture, and good for your tax business because you will find it easy a bit to find your tax payable within a click of what? A button. Now, I said, presumptive taxpayer, if your sales are below 10 million, no tax payer. Whether you keep records or not, there is no tax payer. Okay? Now, we have the second band, where you make sales and the sales are between 10 and 30 million. Okay? 10 million and 30 million. Now that's the first band where someone pays. And under this band, the tax is 0.4% of any amount that is above 10 million.
Okay. For someone who keeps records?
Yes. For someone who keeps records, it is 0.4% on any amount that is above
10 million.
10 million.
So
So if it's 15 million,
Okay.
huh? Can we do 15 by mathematics?
We could do 20.
We can do 20.
Let's do 20.
Yes, 20. If it's 20 million, so it means you have 10 million for 0.4% of the 10 million, which is above the threshold. Okay, we have a threshold of 10 million again here.
Yes.
Now 4% there. 4%, how much is that? If we...
0 point, so that is 0.
4,000?
Yeah, 0.0. It is 0.004.
Yes.
Yes, 0.004. Because when you multiply that, I think, let's see the difference. 0.004. Okay, that's 40,000.
Yes.
It's giving me 40. 40? 40.
Four.
Yeah,
40,000.
40. Yeah, it's 40,000.
So you see that you're a presumptive taxpayer who is only going to pay 0.4% of 10 million. And it's 40,000. 40,000 as tax in a year. Okay? Now, if I were to compare this, still making sales of 10 million, okay, between 10 to 30 million, but I do not keep records. The flat tax through the year is 80,000. It's above 10 million. If you don't have records, a flat 80,000 shillings you pay. Now I'm on the third band, where your sales are between 30, and I think you're following me on the screen, where your sales are between 30 and 50 million. Here you will pay 80,000 if you have records, and this is the preferred. 80,000 plus 0.5% of the amounts above 30 million.
Okay, so if we are, for example, if someone is on the 50 million mark,
50 million mark.
Can we try to
yes, 50 million mark. If you look at the million, someone making sales between 50 to 80 million sales in a year. Your tax is 180,000. Okay, 180,000 plus 0.6% of the amounts above 50 million. You get it? So still you use the same kind of, yes, you get 180 million, then you, 180,000, then you add the 0.6% to whatever, to the 0.6% of the amounts above 50 million, and you pay that tax. Trust me, under that band, your tax cannot go beyond 360,000. It cannot. If you keep records. But your colleague who does not keep records has to pay 400,000, regardless of whether it is 50 million or 79 million or 62 million. So what this regime actually encourages, one, is to have proper record keeping, because it was designed for you, the small business operator, to save costs. We have the last band of people who pay 80 million, I mean who make sales of 80 million to 150 million. There, your tax is 360,000 plus 0.7% of any amounts above 80 million. So still here I need to say your tax cannot go beyond 850,000. It cannot go. It can be 400,000, the tax you have to pay. It can be 400,000, it can be 500,000, it can be 600,000. But your colleague, the business operator who does not keep records, has to pay 900,000, regardless of the turnover they have made. So I would like to interest you to follow the bands as we have them between 0 to 10 million new tax. Okay?
Yes.
For whether records or not. And so on and so on as we have gone through them. But it is actually most preferable for our business operators to really meet their tax obligations. This regime, if you compare it to the regimes that we've had for this tax head here, it is very, very lenient. It's very lenient. It was designed partly to help businesses get out of COVID. For us not to have the tax cost as a killer of businesses during this time. And I really encourage operators to really run to it, as long as you're not in the accepted category of professionals, public entertainers, and the like, who we expect to know and to have the time and the professional rigor of preparing their books and
okay, Michael, you have done a very thorough explanation of this small business tax. I am imagining a situation where Mama Junior, for example, this time has a restaurant.
Yes.
And they are lucky to have gotten a tender to supply a government institution somewhere, whether in Kampala or up country. And they have suffered some withholding tax, because we usually have some withholding tax used to offset the income tax liability, especially for people who are filing the normal returns. So in the case of presumptive, how would they go about it? Probably you can give us an example on how.
Okay, so we have a scenario, maybe. Mama Junior has, she's a supplier of beans or food to maybe a government hospital, should we say, or to a school or a university, and she makes these supplies of 40 million. 40 million, supplies of 40 million. Let's imagine Mama Junior makes supplies of 40 million, and there is 66% withholding tax that has been taken off her payment. So when the university or when the institution where she has made a supply is paying her, they will pay minus 6%. Let us imagine the 6% is 50,000 shillings. Okay? 6% is 50,000 shillings. Now, Mama Junior, ideally here, if she does not keep records, okay, her tax may be 200,000 at the end of the year. Okay, so she will file a presumptive return, which comes with a payment anyway to URA, but the payment may not be effected there and then. Okay, but she will pay less 50,000.
Okay,
you get it? The payment that she has to make to URA will be less the 50,000 withholding tax that was deducted by the university and delivered to URA on her behalf. Actually, you see, when you're asking the question, you said if she has suffered withholding tax.
Okay.
I find withholding tax kind of a big benefit to some businesses, because it helps them to cushion the somewhat, or what would be a big tax burden at the end of the year as a prepaid tax on your behalf. So someone helps you to meet your tax obligation in advance. And when you come to URA at the end of the year as Mama Junior, to pay 200,000, you only pay 150,000. Because the 50,000 that tops up to make it 200,000 was already remitted to URA as withholding tax. Now, this withholding tax, for it to be allowed as something that, as a tax that can reduce on the tax that you have to pay at the end of the year, it has to be directly attributed to that gross turnover that you've declared to URA. Okay. So you don't find withholding tax that has been, that you have benefited from other sources of income that are not part of this gross turnover that you're showing to URA. and you want to deduct it off. No. The provisional tax or the withholding tax are the only two taxes that are allowed as deductions on your gross turnover for Mama Junior that you declare to URA. So you don't bring all the other credits that you've seen anywhere and you want to subtract them off this tax. No, this tax can only be reduced for Mama Junior by withholding tax that is in line. That is in line with the supplies that you made and declared to URA as part of the gross turnover that you declared that year.
Okay, thank you so much, Michael. I think our viewers, we've had an elaborate explanation on the key issues under taxation of small businesses. How do you pay? How much do you pay? What happens, for example, if you have withholding tax credits that you need to claim? How do you go about it? I'm going to ask Connie to now take us through briefly on how these small businesses handle the issue of returns. Do they actually file returns? Because Michael has just explained to us what they are supposed to pay. How is the issue of returns handled for these businesses?
Oh, thank you very much, Isaac. First of all, what's a return, if we may ask ourselves? A return is a feedback in a normal management language that a taxpayer gives or submits to URA, indicating the position, the performance of his or her business. I'm using the management language for the benefit of our listeners, our viewers. So, if a small business person does not file a return, there is no way URA is going to know whether that business is actually there, it's happening or not. So the particular person or the taxpayer who has that business must interest him or herself to give feedback to URA in the form of a return. We have due dates for different returns. For example, small business persons, individuals in this essence, must file returns by the end of the first quarter.
Okay, when we talk of quarter,
we mean
someone may think the quarter maybe March, January to March?
No, to elaborate on that, the financial year begins on every 1st of July.
1st July,
okay,
yes.
And ends on 30th June. So in between we have quarters. They are months that were aggregated for the benefit or for the easiness of individuals to file their returns and pay taxes. So the first quarter falls due on 30th September. So I would request people, small business taxpayers, to have filed their returns by 30th September. Because going forward, if you file the return, you might find that there is a penalty that comes along with it for late filing. Okay. So to avoid those penalties, I would advise our clients, our taxpayers, to always file the return before 30th September. Now, if you are a company, a small business company, we expect you to file a return by 31st December, 6 months. That is by end of the second quarter. The second quarter falls due on 31st, by 31st of December. Okay? That's when. And this comes along with payments as well. When you file a return, a presumptive, you know, they made it easy for our taxpayers not to hassle with filing of returns and then go ahead and register a payment slip. So when you file a return, it comes along with a payment slip. Now, that doesn't mean that the total amount that comes on the payment slip, you are mandated to pay it. You might find that the amount is big, and this taxpayer is ready to pay a smaller bit. So we can spread the payments within 4 quarters. By the first quarter, that is 30th September, you can pay a bit. By the end of the second quarter, 31st December, you pay a bit. By the third quarter, that's March, you pay a bit. And by 30th June, you pay the final, as long as it totals up to what was assessed in the entire financial year.
Oh, thank you
Yes.
so much, Connie. So in that case, I'm going to, I'm wondering, how are these payments and the return filing, how is it done? Is it, Michael, over to you. Is there a platform? Does someone have to go to their phone? Where do they get the access to generate this return?
Yes, you go to the URA website, ura.go.ug. It's where the taxpayer will visit us and under the services and be able to meet this obligation of making the declaration to URA on how the business performed in terms of sales in our case. How much did you make as sales? And then also pay the tax that results from the declaration, that comes out of the declaration that you made. So I think we all see the process. You first declare to URA, and then it's out of that declaration that your tax is estimated, still in the same process. Now, I'm going to make a short illustration to perfectly attend to the question that you asked. Now, you visit our website, Uganda Revenue Authority, ura.go.ug, and I think everyone is conversant with this website. Then you go to e-services. This is where you access all the URA services. And e-services, if you're here to transact, I hope you're all able to see. We have the first service that you could go for would be registering for taxes. But in this case, we are choosing to say payment for taxes. So you go for payment registration, okay? Payment registration here on the URA website, okay? So I'm clicking payment registration, and we are in the process of making a declaration for presumptive tax or for small business taxpayers to Uganda Revenue Authority, okay? So, moment here. So, like I said, we go to e-services, you go to payment registration, okay? Now, when you get to payment registration, you scroll down up to tax head here, okay? And when you get to tax head, you choose, there are many forms of taxes, but choose income tax small businesses, okay? When you click income tax small businesses, it will take you to a summarized kind of interface where you input your TIN. Now, I'm using my TIN. Okay. Now, I'm using my TIN, and it automatically populates the interface with some of the cells with my name. And I input my registered email address on this TIN. Okay. You put your registered email address on your TIN. Okay. So it validates and checks whether that is the email address that is actually registered. If I try to put a wrong email address, it will reject it. So use the email address that was registered and the phone number that was also registered on your tax identification number. And after that, like we've been saying, year of income, you choose the period which is a full year for which you're registering this tax head. Now, our period, as we are all aware, the financial year starts on 1st of July. So the moment I put 1st of July, it will automatically populate the end date of the year. And you see it is saying assessment date too, because like we said, a presumptive or any return that you make is guiding us towards the assessment of the tax that you have to pay. So I'm declaring, but at the same time, I'm in the process of generating an assessment. Now, I could have a business registration number, but for purposes of saving time, let me say this is Michael's Garage. Okay? It's Michael's Garage. Maybe I operate in Kampala City. It is a garage. And my gross turnover is what will be used to estimate what my tax would be. Now, gross turnover, look at this here. They have asked a question here, very important. Do you have business records? This determines whether I'm going to pay tax based on a situation which is where I have records, which is lower, or where I don't have records, which is slightly higher. So where I say that I don't have business records, I'll say maybe my sales are 55 million. Okay? This is the total amount of money I got from people who came to my garage for repairs. Now look at this table for the section for tax payable. It is saying I have to pay tax of 400,000.
It's the fixed tax.
It's the fixed tax because I said I don't have records. But if I say, yes, I have records, and I put my 55 million, okay?
Wow.
It's like a half of the tax that the other person has to pay. Okay? It's like half. It's 210,000. So it's really important for us to keep records. And it is not for only purposes of saving on your tax cost, but it is really important for other things. But I want to proceed. I would like to proceed. The district, maybe let's say it's Kampala where I selected. Maybe I'm in Kampala Central Division. Central Division. Where is my garage? Let me just say I am in what? Kiseka. Okay. In Kiseka, and I add. Okay. I can add. I add that down here.
What is the purpose of adding?
Adding is to register. It registers the area of operation and that particular tax head has registered, so we can capture it in our systems. Remember, like Connie said, there is when you make payments in bits and that tracking has to happen. So we go to the next page where I choose the form of payment that I have to make. Am I going to pay using Visa card? Am I going to use mobile money? Where our small businesses actually would find it easy on your phone the moment you do this. Okay, you could use these other payment options like RTGS, EFT. We have many. We have POS payments, point of sale payments. Most people go to the bank. Okay, and then after that you insert this this special character here, 8VP, and you submit. Now I'm not going to submit for purposes of demonstration. But I think our viewer out there has really grasped how to run the ropes of this particular tax head when you are making a declaration. So when I click submit, one, I have made a declaration to URA that I made sales of 55 million. Okay? That I have made sales of 55 million. That's the declaration I have made. And secondly, I have also made my assessment. Okay? Assessment for tax. And you see it is 0.6% plus the other amount that we talked about, which is 180,000. Okay? So it is 180,000 plus I think 30,000 there. And then we have the tax that resulted, which is 200. So this is how you make your assessment. This is how you make your return to URC, to the bank, or you just tap on your phone and effect mobile money payment, and you go back to your business. You know, I did this in around 5 minutes.
5 minutes, yes.
5 minutes of meeting tax obligation. And you run back to your business, run it to the courier.
Okay.
So a small business taxpayer watching us today, watching us right now, can actually meet their tax obligation. And the time cost of doing business for tax purposes would only be 5 minutes.
5 minutes.
In a year.
Only 5 minutes.
Only 5 minutes.
Wow.
Okay? The cost of the tax is 210,000, agreed. But the time cost is as much as 5 minutes. So it is the simplicity that I started with,
Yes.
Connie, when we were starting this discussion. It is the certainty that I know I pay 200,000,
Yes.
and I pay that at the start of the year. And then these issues of they have given me an assessment, I don't understand it, will be nowhere. People will concentrate on running their businesses. Our small business operators will be running their businesses. Before you know it, they will be the large business taxpayers in the country, and we will be all happy people, all of us.
Oh, thank you so much, Michael. I think our viewers, we've been able to follow the proceedings as they were. Probably my last question in that regard, after all this discussion, we have endeavored to explain, we have had illustrations. Now the question is, I am very stubborn, I am not going to pay that tax to URA. Please, what are the likely consequences of that? You see, we have many of our members, especially in the society, who always ask for services, but they keep wondering, there's no purpose of paying tax. Can you please give us some insights on why someone should actually comply, and what could be the consequences if they don't comply?
Thank you very much, Isaac. The consequences of not complying to our viewers out there might be a little uncomfortable or threatening, but I'll begin by advising our clients out there to always endeavor and file the returns. Give that feedback, because URA is not interested in penalizing taxpayers, because currently now we are into register expansion. We need that client, we need that taxpayer. We come down to educate, and if we put across those easy measures, especially when you want to make your return, when you want to make your payments, and you do not need to leave your premises to look for any URA office or to go to your office of jurisdiction, then we are simplifying things. We are making you comfortable so that you avoid these penalties. Because believe me, we do not have, URA does not have control over the penalties. They are system generated. And by the way, for any person who fails to file the return by the due date, is penalized at 200,000 shillings.
Wow.
Yes, 200,000. Imagine you were a client who has record keeping, you have your record kept, you would have paid a 40,000, and then because of some reason, some issue, some laxity there, non-compliance, so you don't submit the return on time. You add on another 200,000 shillings. We are not interested in your 200, by the way. So that's why we are saying, please do due diligence, do your computations on time, do the return on time, and pay the tax. After all, the tax which has been assessed is spread among the quarters up to the end of the financial year. So our viewers listening to us, kindly endeavor to submit your returns before the due date to avoid those penalties. To avoid URA officers coming to your business premises and try to come up with any figure. They can come up with any assessment, depending on what we see. For us, we are going to look at your business and then ascertain, and then do what we call an industrial average. If Isaac shop is shop A selling women's clothes, Connie is selling the same, we are going to do an industrial average. So in order to avoid that, kindly do submit. It can be even done online wherever you are. If you have a smartphone, you can ably transact with URA. Yes.
Oh, thank you so much, Connie. And We are actually getting close to the end of this program, and I'm going to request that we share some parting shots. I'm going to give each one of us a maximum of 2-3 minutes, so that we can have that rallying call. What is that message that we want our taxpayer to get today? What is it that you don't want them to miss? We have had a fruitful session. We have had elaborate explanations. It's now time for us to get those parting shots. Michael, your parting shots.
Thank you, viewers, for tuning in on whichever platform you've been with us. Very important that you note we have 7 days to the end of the financial year, 7-8 days to the end of the financial year. So you have tax returns to file, you have tax payments to effect. It's very important that you attend to them. Even the presumptive tax that we've been talking about, this is the end of the 6 months that started on 1st July 2021 when the financial year ended, 30th June 2021. The final returns for the previous financial year are due. So file them. The provisional returns for the current financial year are due. Please file the returns and pay the due taxes. That is one. Two, it is really, really important that where you find yourself unable to be in a position to file these returns, as we explained, come in time to URA and file or apply for extension of return due dates. Okay? Come and apply in time. Go to the URA website. Actually, go to URA website under e-returns after you've logged in and apply for the extension of the due dates. Apply for a period when you think you will be able to file the returns, because that would keep you in good books with the tax authority, for us to know that you know the obligations are there to file returns, but you have measured within yourself and the time does not permit. Indeed, if you fail to make these returns, there is a punitive regime that comes, because while you're not doing it, your colleagues in the business are doing it. And that's the tax fairness that must exist, that those who are doing it get that pass, the free pass, and those who do not do it are enforced to be able to do what all the others are doing. So the punitive regime of the penalties and interest when you don't file returns, it stands and it works. And if you look at the punitive regime in the regime the way it is, some of the penalties are higher than the principal tax that you ought have paid, and that is not good for your business. So I would like to encourage you to meet those obligations, payments, filing of returns. I want to wish you Christmas and Happy New Year. Thank you very much.
Oh, thank you so much, Michael. Connie, your parting shots, or you could send a message, a final message to our viewers today who are watching us today.
Thank you very much, Isaac. As Michael has said, this is almost the end of the quarter, and we are expecting those payments. We are expecting the returns, as he has said. But above all, since I'm currently in charge on boarding, our teams are out there in the field. They are out there to register that client who hasn't been on our register, because we are trying to build the register to relieve the burden of the few Ugandans. By the way, the budget is almost supported by employees, me and you. But there are so many people out there who would come on the register and help, because if we share this budget, then we shall be able to pay less tax. So the teams which are having team leaders are in the fields right now. We've done a lot in different regions of Entebbe, of Nansana, of Chaliwajala. We have been in different parts of the country, and we have registered those would-be clients who were not on our register. So the second phase, we are targeting, and we are coming to issue out those payment registration slips so that people become compliant. And we shall show you, or the team will ably show you how to file those returns Please don't shy away from those teams which are in the field. Please come and learn. Make use of our toll-free lines. Because URA is open, our contact center is open. It can even be reached on 080017000. You can air in any pain, it will be addressed. You can even go through number 0800217700. All those lines are toll-free. You don't need to spend. Okay. Please, let's become friends. Let's build Uganda together because we are Ugandans. There is no foreigner who is going to come and help us build this Uganda. I wish you a Merry Christmas and a prosperous 2022.
Oh, thank you so much, Connie. Our dear viewers, we appreciate the time that you've spared to watch this broadcast. We are coming to you live from the URA TV here at the URA Tower. And as URA, we continue to commit ourselves to serve you, above all with patriotism, integrity, and professionalism, as we mobilize revenue in a transparent and efficient manner. Our goal is to make sure that Uganda as a country can fully fund its budget and it can actually sustain itself, so that we get rid of this perennial borrowing and we can actually live in a very prosperous country. As we go for Christmas, we want to urge you as URA, please travel safe. I know there are so many vehicles now on the road. Let's use our roads carefully. We pray for safe travels for each and every one. We pray that you may be conscious of COVID. It is still with us and the cases seem to be rising by the day. Let's keep the SOPs as guided by the government of Uganda, but also let's make sure we comply and put at least a certain contribution to the development of this country. In the studio was Michael Masembe and Connie, all from Uganda Revenue Authority. They are the experts that have taken us through, and I remain Isaac Jagenda, who was your moderator today. Thank you so much. Merry Christmas and Happy New Year 2022.
Now how did it get there?
Do you know that with EFRIS, you can stay on track of all your business transactions and improve on your record keeping?
How so?
Kati tuli ku computer with EFRIS. I just search using the fiscal document number and I retrieve the records I'm looking for. Bookkeeping becomes simple after that.
Kapo, awesome, yeah.
I began using URA's Kakasa solutions and now I'm in charge of my business. And you can as well.
Kakasa, be sure you are in charge of your business.
Uganda Revenue Authority. Developing Uganda together.